Hello everyone, good afternoon and welcome to today's trading the markets. This is now the US Open and I should just bring up our trading screen just briefly. Sorry, let me bring this currently up on screen. We're just currently looking at a couple of trades. The first one is a trade that we're currently into the upside on the pound yen. So we do have a take profit just above these levels. But we shall come back to those very shortly. So welcome to Trading the US Open Live. And today is Tuesday, the 18th of September. So what we look to do in this session is look for high probability trading opportunities. We do look to identify these high probability trades by looking at multi-time frame analysis, so looking at what's going on in different time frames. And then we have a bit of a process for us to actually look at smaller time frames for us to execute trades, then manage that trade with one view, and that is to book in consistent returns. So without further ado, if we could start with our risk warning as we always do, so please do take a brief moment to familiarize yourself with our risk warning currently up on screen. Okay, so before we begin, let's do a quick review of potential market moving news. And there's significant value in us as traders doing that, because the last thing you want to do is get involved in trades knowing that there's potentially news that could impact the trading decisions. So as we look through the afternoon session, very, very light in terms of any significant news today. We've had nothing throughout the European session. We did have Draghi speaking at 8:15, but that's more of a private event with no significant movement. A little bit of mild sort of European strength, but certainly that cannot be attributed to Draghi's speech this morning. And as we look through the afternoon, we have, as you can see, there's three different colours here that they all classify the importance of the news events. So we have a manufacturing sales news event at 1:30 impacting the Canadian dollar. It's medium impact, so not likely to provide huge volatility, but we shall certainly wait and see. And we do have the GDT price in New Zealand, and what we're talking about here is the price of dairy products sold at auction in New Zealand. So obviously they're a mass exporter of dairy products, so that's a little bit on the significant side for the New Zealand dollar, but we'll see how it's very tentative, so there's no exact time on when that will be released. And we have mild information in the evening impacting the current account information at 11:45 p.m. So just be mindful of these events if you happen to be trading the New Zealand dollar. But as you can see, nothing of any major concern. Again, guys, as we often say and discuss, outside of the major macro events, of course, those of you are probably aware, Trump made an out of hours statement to the markets that the US were going to impose a 10% tariff on something like $200 billion worth of Chinese goods into the US. So he's trying to address the deficit, the trade deficit that of course exists between the US and China. He's trying to do something proactive with that. The problem with that is China are not going to just accept that, so they may be incurring their own tariffs on US goods. And there is the essence of a global trade war with winners and losers on both sides, and the impact that could have on global growth could be quite significant. So a bit of a potential game changer, and of course, you know, situations like this could continue for decades, and that is of course the concern that certainly us traders would have. And what impact would that have on the US dollar, on the global stock markets? It would be very interesting to see how this is potentially going to play itself out. So, and of course, on a European level, we have the Brexit negotiations, we have sanctions with Iran, we have difficulties with Russia, and geopolitical developments occurring all over the world. So certainly an interesting period. and as a result, the markets are embracing a lot of this change with an element of indecision, an element of fear, I guess, across some of these markets. Small moves, a lot of sort of fake breakouts and pullbacks and reversals and things like that. So just a bit of a looking across some of the major global markets in the world, a little bit of a lack of really clear-cut direction in some of these markets. Now, with that in mind, I do want to come back to the Swiss yen. So we're currently in this trade. I'll just show you very, very quickly. We have our take profit just up at these highs. So if we get a move onto this market, then it at least gives us a good risk reward on that trade. And we took a small trade in the dollar Swiss below yesterday's low, which retraced. So that was, I think, a 10 pip loss. So hopefully we'll have a net gain of a morning if we just get this market just squeezing higher, going into the US trading session. So we'll see how we get on with that. So we'll come back to this markets very, very closely, very shortly, should I say. And we will continue to look at the dollar Swiss. A lot of strength we've seen a significant amount of strength in the Swiss franc, and some medium to significant weakness in the US dollar. We are getting a slight bullish sort of bit of price action coming into the euro against the dollar. However, interestingly, sort of trading between the 17.33 to the upside and the 15.26 to the downside, with very little follow through in terms of direction. 4 trading days ago, which would have been last Thursday, we had a really strong impulsive move to the upside. And then on Friday's trading, we got a really strong reversal, followed by Monday's trading, really strong buying signals. And we're getting a little bit of continuation today in today's market, but very little movement in terms of the European session against the US dollar. Now we've got varying moves against different markets. The pound, as the morning has unfolded, has begun to strengthen against the little bit of strength that was in the US dollar. So we will watch this market. We do expect this market to continue to the upside, at least for the short term. Yes, there is tailwinds. This is one of the markets which is showing a direction of kind. So we do expect this market to continue lower, although today we are experiencing a little bit of a pullback. And we are still above the weekly high in this market, which is the 31.40 level. So we're currently above that level as things stand. So let's look through the rest of the markets and see what genuine opportunities may exist. We're seeing some weakness creeping in to the yen. Now, we didn't want to necessarily trade the dollar yen because there's stronger markets like the Swiss, which is why we're currently in the Swiss yen. So we want to try and trade strength versus weakness, and there's clear weakness in the yen. Although this has been quite choppy the last 2 or 3 days, it hasn't given us clear-cut decision making, and we're likely to see a little bit of weakness start to creep in to the yen, especially if we start seeing a little bit of strength creeping into the global equities, which is effectively what we're seeing. So we'll come back to those shortly. We'd prefer to focus on the Swiss yen. If we get that opportunity to close that trade out, we might look to get into it again above that level. The dollar Swiss, we still like the idea of this market below the 96.07 level. We are just trading 6 or 7 pips above that as things stand, so that may give us an opportunity. Not much happening in the dollar CAD today. Tomorrow we might get some continuation, which could be useful for us. Marginal strength in the Aussie, but you can see we're still contained within the weekly high of the 72.35, bouncing off these lows. So for us to get a clear-cut direction in either direction, what we're effectively looking at is a market that is reluctant to push higher with any degree of confidence in that market. Similar situation really. We do want to see this market close the 65.95 for it to give us a good opportunity to suggest that there may be some strength coming in to the New Zealand. To call it strong is an understatement. We're at the lower elements of this this market. We're looking around and we're seeing a lot of Aussie and New Zealand strength, and as you can see, yes, we are having a day of marginally stronger Aussie dollar, but by no means could we kind of refer to this as a strong Australian dollar. So do bear that in mind. Trade what we see and not what we hear necessarily, and not what we're told. Make your own conclusions off the back of what price is doing. So we've had a bit of strength come in against the pound. So we do ultimately like this to roll over to the downside. So we have to probably wait for that opportunity to arrive again. Getting a little bit of a bounce, no major surprise really, with the volatility that we've been experiencing in the euro pound. And we have seen a bit of strength creep in across the euro pairs, and we're seeing a bit of a break to the upside in the euro yen as well. Breaking out above this descending level, as you can see in the pound yen, and this market is squeezing higher to the upside ever so slowly. So it just remains to be seen whether we're going to get much more continuation in that market. So a few of these are definitely difficult markets to trade. You can see the gold market reluctant to push higher or push lower as things currently stand. So obviously that makes it for slightly difficult conditions. We're seeing a bit of strength come in off the 68.80 level in the US oil market. A lot of that is related to fairly strict sanctions placed on Iran by the US administration, and the net result of that is a restriction in supply of oil, and that is likely to push prices higher. But as you can see, we've got significant sort of levels up here that this market can potentially run into a little bit of resistance. Similarly, if we look across the line, taking sort of these levels into account, we can see that there's a bit of support to the upside, but we're likely to again run into some resistance around the $70 level, even maybe up to the 71. So again, we just need that clarity in terms of direction, even though we're likely to just squeeze a little bit higher in the shorter term. Now, the US markets are definitely interesting for us to watch. We've had a rejection to the downside and a little bit of strength come in. We've pulled back off those highs, as you can see, across the US equity markets. So it'll be interesting to see at 230 whether we will actually see a little bit of strength creeping into these markets. We shall, of course, take a strong look at that. So looking at these markets, it looks like we're creating a bit of a double bottom in here, which could provide a little bit of strength. It may be the case that tomorrow we get the higher probability trade to the upside in the NASDAQ market, because what we're seeing now is just a pullback to the 73.88, and the potential for this market to continue higher is a very real one. So we'll keep a close eye on these markets as this trading session unfolds. Not much happening in the FTSE for the last couple of weeks, just literally moving sideways between the weekly high 73.35 and the weekly low of the 72.20 level, and then finally strong rejection to the upside. And this is really why we're not, from a consistency perspective, we're not overly interested in buying this little move within this range, because what we're anticipating is actually this market to make another attempt to push lower off the 33.55 level. And so far so good on that trade. This is the level of potential resistance, and we might see if we get that little rollover to the downside. So that is the Eurozone, the Euro Stoxx 50. So today again, we're not really getting the trade signal on the daily time frame. So when it comes to identifying high probability trading opportunities, we're left with the UK oil is extending higher but likely to run into resistance. We're left with few opportunities, few and far between, and we might actually revert back to the Swiss franc, which is the market that we've seen the most strength in these markets recently, and certainly continue to look at the yen. So as you can see, we're limited in terms of trading opportunities as things currently stand. Now, if we have this candlestick today and we get a little bit of a continuation tomorrow, then we're likely to capitalize on these little moves just to the downside below today's low. But we don't really have that kind of setup as things stand. We've made a low, and what we're anticipating is this little move further to the downside. But we just need to be a little bit cautious at these levels and kind of wait for the high probability opportunity to reveal itself. So we'll continue to look closely at the dollar Swiss. We've also have the dollar extending against the yen, so we've got some yen weakness, and so we'll have a look at the dollar Swiss on one side. So this is our trade plan, and this is kind of how limited we are effectively. We do have a take profit just above these levels, and although these pullbacks are quite significant, we haven't really had much of an opportunity to remove risk on this trade. We only have a 12 pip stop loss on this market to the downside, so we could bring that up just a little bit. So it's a really small risk. It's a small trade, I'm afraid. So we really want this level to be taken out, but from a risk perspective, we could certainly mitigate risk on this market now, and see if we get a break. If this market just completely rejects those highs, we're kind of almost fed up waiting for it, really. So we'll either get a pullback to our entry price, or we'll get this market continuing higher and we'll book in profit. So it's going to be one of these situations where we're looking for one move or the other, and with a strong bias obviously for this market to continue higher, and it could do so very, very quickly, and we could get a nice explosive move higher. We're not too far away from it, so we'll see how we get on with this trade, and we'll continue to monitor that market. And I'll just convert it to a 5-minute time frame. So now we have our stop loss below this 5-minute handle, which is quite important for us, and we're running into this level of resistance, so it's very likely to support prices to push higher. So let's see if we do finally get that little bit of follow through in this market. So we'll keep a close eye on the Swiss yen. And it's interesting to see what we're going to experience from the dollar. It seems to be shifting from a little bit of weakness to a little bit of strength, depending on which market you're looking at. So nothing overly conclusive in either direction. I guess the only sort of caveat to that is the fact that we're above the weekly high of the 112.07 on the dollar yen, with the expectation for this market to continue a little bit to the upside. But let me look at this from a weekly time frame perspective, because it looks like the high is not as accurate as we would like it to be, the 112.16. So let's change that level. 112.16. So yeah, so that's the accurate weekly high, and we are still technically above that level. as things stand. And as long as we're above that level, we would expect it higher. The only problem is we're not really seeing strength across the dollar by any stretch. So trading this market is effectively trading weakness with weakness. So it's a bit of a shame. And you can see that the dollar beginning to strengthen a little bit against the New Zealand and the Aussie, and a little bit against the Canadian dollar, and of course against the Swiss, which has been particularly strong. A market we were looking at this morning was potentially the euro pound to roll over to the downside, but we never really got that opportunity. Now the reality is we are still looking for this market to continue lower. So we're obviously getting a bit of a bullish bit of price action kicking into this market, which is of course absolutely fine. It's very much entitled to do what it wants to do, but when it does roll over, we might look to capitalize on this market again below the 88.76 to the downside. So let's have a look at the euro yen. A little bit on the choppy side in terms of identifying a clean cut opportunity to the upside. I suppose we did have a really strong pullback in the latter part of the European morning session, and this level did provide a little bit of obviously support, as you can see. So I'm going to change this to our intraday level, which just differentiates those opportunities, and then we've got a structural push to the upside. So if this trade was during kind of normal trading hours and conditions, we'd be looking to get in around the 130.89 level with the potential for it to push higher, which is what we've seen. So that's the high probability trading opportunity after a pullback, a structural failure, and then a movement to the upside. But this is on a 15-minute time frame, so we were talking about 2 hours ago, really, which would have been about 11:30 UK time. So again, we look to focus on normally the most volatile session of the day, and that's normally the first couple of hours of the US Open and also the European Open in the morning at 8 AM. So the first few hours of each session, obviously historically, are pound for pound probably the provide traders with the better opportunities on a consistent basis. Ironically, over the last few weeks, the movement or the volatility during those sessions has not been great. We've often seen the actual volatility creeping in on many markets in the latter part of the US trading session. So a little bit unusual, but those are the current market conditions that we need to negotiate. So there's potential for these markets to strengthen. So we'll see how we get on with those. So the dollar Swiss is just pulling off those lows as we speak. And our Swiss yen is just hanging around these levels. So hopefully we'll get one more push to the upside, and we're likely to book in profit on that trade. Markets that we like the look of would be the potential for some continuation to the upside. I'll be interested to see if we do get an impulse move to the upside in these markets. They're not filling us with confidence just yet, but it will be interesting to see how these markets perform in less than an hour's time. So you can see the yen continue to weaken against the US dollar. So yeah, apart from that, relatively little opportunity, but obviously things can change. Do want to try and stay vigilant if we can. What I'm going to do is just mark these three highs. I'm going to just tidy up this image. So this high is quite an interesting level for us. Let's go into the 15-minute time frame, and it's really preventing this market from pushing to the upside. And then we can take note of this weekly low. Oh, sorry, this 15-minute low. So if we get in and we get this market breaking above the 28.97, we could have a stop loss 28.92 or just below that level. So what I'll do is I'll bring this level down. So this is the level that's likely to provide a little bit of support on the daily time frame. So we're currently squeezing up these levels. So again, if we go in, let's start 15-minute time frame. So we can see that this market is kind of attempting to break out to the upside. Might give us a good opportunity with a stop loss maybe below the 26.102 level. So let's see. It would be a slightly bigger risk exposure than normal, but might still be worth looking at. And finally, this was the level to the downside, and of course this is largely the level to the upside really when we look at this market. So we've had a little bounce off that level as things currently stand. A little bit of a pullback, and now we're attacking this level once more. So again, if we get a break above 74.57, we might look to get in and place a stop loss at 74.34 level. So a couple of potential viable trades there. Let's have a look at all of these three on 15-minute time frames. Now we wouldn't be necessarily looking to trade all three of them, but we might look to see if we can even get into these one at a time. If we can get into a trade, effectively book in profit or break even on it, then we might look to add. And that's if we get a bit of a rollover across the equity space. So this is on a 15-minute time frame, so potentially getting that strengthening move to the upside. We prefer to focus on the Swiss yen just for now. The rejections of those sort of daily highs. The CAD is beginning to strengthen against the dollar. Not much going on with the dollar Swiss, to be fair. So this movement, or this weakness, continued weakness in the yen pairs is likely to support our Swiss yen market. So hopefully we'll get one more impulse move to the upside. And if so, we can book in profit on that trade. So just post there in your chat box. So do feel free to post any comments you might have, or perhaps you might have some markets that you're looking at. Be interested to see what you're trading right now. So do feel free to use your chat box. And I suppose with relatively limited opportunities, I do kind of want to flick through a few of these. We are getting that impulsive move higher, as you can see, across the US equities. I suppose the market that could give us the biggest move would be in the NASDAQ market. So we've created a double bottom, and we look carefully for a bit of a move above the 74.57, which coincides with this previous low here. So quite straightforward move, a breakout above 74.57, stop loss below the 74.34, and with the potential for this market to perhaps squeeze up to 75.18. So we shall see if that is a viable opportunity for us or not. While we're looking at this, we'll just keep a close eye on all of these. See, this one's grinding higher. It's not as nice as the NASDAQ. So we can prioritize opportunities and entries. This is a little bit better because we've got a clearly defined kind of floor sitting in this market at the 28.82. Maybe it's a case that we look for a little bit of an explosive move in the US equities today. I'm sure that the US equities are likely to strengthen off the back of Trump's decision until the Chinese make it clear in terms of what their retaliation is going to be, and then I'm sure we'll start seeing the US equities perhaps react a little bit differently. But for now, it seems like there's a bit of it seems to be a little bit more supportive of price as things currently stand. So we're looking for the S&P to break above the 28.96, and we're also looking for the FTSE market, sorry, the NASDAQ to break above the 74.57. So if we get those two moves, we might look to get involved in those markets. So we will add that to our potential opportunities. Hopefully we can book in a bit of profit on our Swiss yen. But it would be sort of a 10 pip net gain for the trading session so far. So very little risked. We took a small 10 pip loss on the dollar Swiss this morning. So it would make us profitable for the day, but really cherry picking the only opportunities that are really sort of quite tradable. So what we'll do is, let's keep an eye on the dollar Swiss on the top left hand corner. Whoops. So we'll keep an eye on this market, and we'll also have a look at will hopefully close out a profitable trade on this market. So we can keep an eye on that on the bottom left hand corner. And apart from that, we're just going to be looking at this particular move. In fact, we've got both of these trades currently sitting in here as things stand. So we quite like the idea, and it looks like we're just getting that breakout now as things stand. So let's go into the smaller time frames. Let's see if we get a close above that level. Same situation for... So we like the idea of a nice strong run up to a breakout. It does meet the criteria normally for us looking to get into these markets. So we are looking like we are going to be trading the US equities. So we have a good understanding of our predetermined risk in this market. We know what size we're trading, which is we're trading one index when it comes to the S&P 500, and we're looking to kind of try to mitigate as much as we can the risk as quickly as possible. But first of all, to get into it in terms of the execution side of this trade, we've identified the opportunities for the right reasons. We're okay and very comfortable getting into it, so that part of it is fine. But now what we want to see is the push higher and then a close above 28.96 to try and be as consistent as we can with our entries, and then we'll place our stop loss beneath the low. So now we're getting this little move above. So let's just see how this price behaves above the 28.96. We're currently at that level as things stand. So the grinding price action in the Dow Jones does not give us the technical setup that we would ordinarily look for. The S&P does, and certainly the Nasdaq would as well. So let's see what happens next in this market. Hopefully we can capitalize on a good trade to the upside. So we have closed above it, but we've slightly gapped to the upside and we've pulled back, and now we're currently back at the 28.98. So we can be a little bit more patient with this. What we can also do now is just go through that process again and just wait for the confirmation above the 28.97. So we're really not seeing much follow through in the Swiss yen, a little bit. So if we see like a pullback in this, then that's actually not a bad thing for us, because the next time we break above this level, because we're looking to break out above resistance, we actually have a smaller stop loss. Whereas at the moment, if we get a break above it, we're currently we'll have our stop loss at this level. So it's not a bad thing if we get a bit of a pullback off this high. We can use it certainly to our advantage. If we do get that pullback in this market. Andrew Mitchell, hello, how are you? I'm very well, thanks, very well indeed. The euro pound was really grinding lower slowly after choppiness for the last few days. You booked in profit at earliest, though, as predicted, it reversed. So you're now bullish the euro yen at the moment. Yeah, good shout. I suppose it's a version of our Swiss yen trade, I guess. Some strength has, of course, come in to. I'll come back to these, or I'll leave these currently up on screen. Good shout, Andrew. Really, to be fair, the euro yen. We've only gone with the Swiss just because of the recent. I'll bring this just in here in the middle of the screen because I'll get rid of it in a second. So you're getting this little momentum shift to the upside. So yeah, really good trade. Are you currently in the euro yen at the moment, Andrew? I wonder. And if so, are you looking to take profit at any point? Or are you looking to let this market, continue higher? Because we have now effectively broken. Well, we're above the weekly high, the 131.11. We're above the descending level. We do have a 131.50 level just sitting in here. That goes back to these October last year. Some levels last year we were looking to work with. So they can provide a little bit of resistance, but if we get a constructive break through that resistance, then it can actually provide you with support and assist you to the upside. So good to hear. We'll join these sessions when you can. Keep up the great work. Thanks so much, Andrew. We'd be delighted to have you join us whenever you can make it. So yeah, pleased you're enjoying it. So look, we just have. You clearly have a little bit of resistance around these highs up here. So I don't know what you're looking for in terms of a profit. I don't know the terms of the trade, but so far so good, and there's no reason to not expect this market to continue higher. We've had a really strong pullback and we've retraced most of that move already. So really good to identify this trade to the upside. And you're right, the euro pound was grinding lower for a part of the day, but obviously some strength has come into the euro, and now what this looks like, whereas below this level is effectively a structural failure to the downside, which is all good to sell this market, but now the problem with that sort of slight rejection this morning of this level is it now has the potential to become a double bottom, which is actually quite a bullish bit of price action. So one of these trades that we'd always look to sell this particular level if we get that opportunity, and we did ever so briefly, but as you can see, this market has pulled back and now we're trading above yesterday's high. So we'd actually expect this market to continue higher, probably only over the shorter term though. So this is kind of in keeping with a lot of the choppy sort of discussions and news events impacting the Brexit negotiations and the impact that has on the euro and the pound. So it was always a riskier trade, which is why we reduced down our potential exposure to a minimum in that trade, expecting it to continue lower, which obviously has reversed somewhat. Yeah, so you're long on the trade this morning on the 4-hour chart, and it broken the pre-highs. Yeah, I think that's the euro yen you're talking about, isn't it? You're wary of the resistance of the 131.48. Yeah, yeah, which is exactly running into these levels in here. So I mean, if you're looking at the 15 or the 4-hour chart, you'd expect to see continuation to the upside. Strong reversal, as you can see in the previous 4-hour candlestick. Yeah, very likely to continue higher, but of course, you don't want this candlestick to roll over either. Yeah, so that's exactly just up at these highs. Yeah, you're absolutely right. It does have an upward trend momentum with a little bit of sentiment behind the euro. So, you know, if we talk about, let's flick over to the daily time frame, and it's a good case in point, really. What you'll find is the really big trades and the ones that you can benefit best from are the ones that have a good positive technical setup with a really strong sentiment behind the move. And I mean, there's not massive sentiment behind the euro, but there's certainly a bit of positive trading activity behind it. And when you get the fundamentals, so it's the perfect conditions to really see, you know, a really strong move to the upside. Now with the euro, yes, we do have a technical move above this level, above the 130. We are pushing higher, so we do have this one going for us. Now, a little bit of a question mark regarding the sentiment. Short-term sentiment, yes. Long-term sentiment, not so sure about the euro. And certainly on the fundamental side, a little bit of a question mark in this. So just to let you know, in terms of looking for the really strong positive moves, we're looking for technical sentiment and the fundamentals to kind of align. And when you get those opportunities, those are the big ones. So apart from that, you're absolutely right to be mindful of the 131.48, Andrew. So far so good. There's no need to make any to panic really at this particular stage, but would absolutely kind of agree that you for sure stay into this market. I'm not sure what your take profit is. What sort of area are you looking to take profit on this trade, Andrew? I wonder. That will be quite interesting. So good trade if you got in on the rejection of the 4-hour candlestick for sure. And I suppose mirror image trade for us is the Swiss yen. So I guess this level up here for us, which is the 116.72, is your 131.48 level. It's effectively the same level. So we do still expect it to pinch up to that level. But as you can see, we've got our take profit just below that level. So hopefully we'll get a little push through that level now as things stand. And we'll actively book in profit on that trade. So hopefully we'll get that move. I'm sure we will. So we're getting the move first of all in the Dow Jones, not quite in the S&P on a minute time frame, and finally the Nasdaq, not quite in the Nasdaq as well. So we're seeing 1 out of 3 conform. to really look to sort of break above these levels. And the other two haven't quite followed suit yet, but hopefully that will be the case pretty shortly. So you took the trade on a technical rather than sentiment. Good stuff. No news announcements. That's the thing behind the euro. Take profit you've not set, but will manage the stop loss. Yeah, with swing lows as they appear. Hopefully, yeah. So you're trading the structure, which is what we normally look to do. I can't say the opportunities recently have allowed us to do that the way we would like it to, but I mean, that is effectively just trading the market conditions. And of course, there's not an awful lot we can do apart from actually trading the conditions and trading the structures. So yeah, no, would agree. Yeah, good approach. Hiya, Ian. You're late arriving, no problem whatsoever. Did you say that we're already in the Swiss yen? No problem, Ian. We're already in the Swiss yen. In fact, we're hopefully on the verge of taking profit on that. Okay, so just took profit on that Swiss yen trade. So it kind of took its time, really, didn't it? We're seeing the Swiss looks like it's going to strengthen again against the dollar. And of course now we're getting our structural failures start to kick in of these levels, so a little bit annoying. So we had to be super patient for this trade, really. Just to mark the high, we'll leave the 116.76 in there. We're obviously at that level now as things stand. So yeah, let's see. Yeah, so we've just literally booked in profit then, Ian, on the Swiss yen. The Swiss yen or the Euro yen, either or would have effectively been a similar trade, and we're getting this market. I suppose in terms of strength and weakness, the Swiss has been stronger than the yen, so it was just that was probably the major reason why we just prioritized the Swiss yen over the Euro yen. And like Tatiana, I don't know if you're currently online with us, but good shout this morning. It allowed us to just focus outside of the normal pairs that we look to trade actively, so it was a good trade in the end in that one. Yeah, so that's your only pair on your radar at the moment. Yeah, I mean, I would kind of agree, Ian. You missed the entry yesterday afternoon, but took small buy trade late last night. Looking at the levels it is hitting now to see what it does. Yeah, worth keeping an eye on. It'd be interesting to see how it behaves around this 116.76 now. And we're seeing really strong reversal, and I suppose this is the reason why we like to wait and make sure we get a close above the level that we're looking to trade. And I don't know, on 3 or 4 times out of 10 it will stop you from getting into this trade. So again, it's an important part of anyone's trading strategy, and that's to identify under what conditions do you enter. Do you have a consistent methodology that will... So now we're actually finally getting this move, which has been a little bit on the painful side. We were already in this market to the downside. Clearly the dollar needed to go through its... a bit of a painful pullback. So what we're doing is, this market is extending lower. What we look to do now is to trade the pullback, and hopefully we don't get a pullback like this, which was effectively a 25 pip pullback. So it's not the end of the world, but certainly with these market conditions, it's made it a little bit too choppy for us right now. So it just shows the strength really behind the Swiss. These markets are really selling off again now. We're already in this market to the downside on our daily time frame, which is our capital growth webinar. And we're getting what is effectively a... You see, this has been happening far too often over the last few weeks, where you're getting a little break to the upside, expecting continuation, and you get a complete collapse, where you really take out all of these lows are taken out pretty comprehensively, with the market for this potentially to continue lower. So does make it really choppy trading conditions. So perhaps something has been, whoops, excuse me, something probably has been, this market seems to be reacting to something. Grinding higher, big collapse, grinding higher, big collapse. So these are the trading conditions. Just makes things quite choppy to deal with, but I suppose that is ultimately our job, is to navigate these moves. Really strong pullback into this sort of range of resistance. So maybe we come back to the US equity story. I had a bounce off the 116.76 in the Swiss yen. So the European strength seems to be potentially European and pound strength. This market could turn quite positive as well. So if we look at this market on a minute time frame, we're currently experiencing a pullback. Where would we like this pullback to pull back to? We'd have to say we'd like to get into it around this kind of level in here. Which is virtually where we're at, and hopefully this isn't kind of a double bottom really for a bit of a significant turnaround. The dollar has been so choppy for us well, this month really. It gives us certain signals in some markets and poor quality signals in others. So let's look at getting into this market then. It's bounced off the 9600 again, which is a psychological level. And let's see if we get a bit of a breakout of this level. See, if we wait for the breakout beneath the low, then we've got a clear sort of stop loss, which is fairly small in size, and we would be trading below the 9600. So I'm going to suggest that as a plan. We've attempted to break the 9600 again, and it's failed. So we're currently bouncing back to a previous level of support, which then becomes resistance, which is absolutely fine. We do expect this market to continue lower, but we'd feel more comfortable getting into it below the 9600 rather than the 9606 level or the 9604. So for the sake of a few pips, we're quite happy to reserve judgment, hopefully capitalize on a breakout to the downside, and we'll use these highs as our stop loss. So again, what we're doing is we're trying to trade consistently, understanding the market conditions are not fantastic quality trades, but are very much worth trading, like this one. Like, we've already tried to sell this market and we took a 10 pip pullback on it. We're trying to take it to the downside once more. You can see the potential for this market to the downside. So really you want to try and give yourself every opportunity to capitalize on a move further lower. Not a lot preventing it from doing so. We looked at the 75 level as a potential area for this what is it, the 95.75 level was a potential level of support next. So so at the moment this is looking like a bit of a rejection on a 15-minute candlestick, which obviously would not be good. So let's keep an eye on this on a 5-minute time frame, because we've had two clear-cut rejections to the downside. So we want to see this market continue to roll over and actually trade below the 9600 level. Then we'll be happy to get into this market once more. Yeah, so Ian, you're saying that's one problem with pending orders. Doesn't necessarily close above your target entry. Just goes above and triggers the trade. Yeah, I suppose when you're using pending orders, I suppose they're great because you can place them, you can identify strong periods of consolidation, like we were talking about a lot this morning. You can identify these periods of consolidation, and you can place, a pending order to the upside, above these levels. So you can say if this market clearly breaks out that level, you could get into this market if the market just starts to break above. You're already in this trade. You could be really concise with your stop loss. There's a lot of positives to pending orders, but there's also certain negatives, and that's obviously you are a little bit prone to the false breakout, which is the market breaking higher, little spike higher, and then sort of coming back inside that range and maybe experiencing a little stop out on the trade. So yes, pros and cons. We like using pending orders. In fact, we only use pending orders when we're trading daily time frames, because our stop loss is at a significant placement, so we can stay out of the intraday volatility. That's more of a concern really when you're trading with pending orders on intraday time frames. But the caveat to that is the bigger the time frame, obviously the larger your stop loss, and therefore the more room you give that trade to move in that direction. So it's all in the application, isn't it, of that move. So we're getting this little market just procrastinating around these levels. So this is definitely a market to trade. We can't really get into the euro dollar now at these levels. We have the weekly level just above it, so maybe it doesn't give us the high probability trading opportunities that we would like. We can keep an eye on the pound, just rolling over a little bit of strength coming back into the yen. So obviously a fast-paced environment, which is of course absolutely fine. And let's see if the Swiss can really strengthen against the US dollar. So we've had the CAD strengthen a little bit, like there's NAFTA talks between the US and of course Canada. That is very, plus we have I think quite a bullish oil market, largely over the course of the day. So the price of oil has been increasing, and we're seeing that play out in the Canadian dollar as well, because it's correlated with the oil markets. But in addition to that, we obviously have ongoing negotiations between Canada and US, so it'll be interesting to see how those do happen to play out. What I'm going to do, guys, I'm sorry, I just realized the time. So what we're going to do is switch across to the live trade room. We do have traders there, and we will continue to look for opportunities in the dollar Swiss, see if we can add to our Swiss yen trade. This is kind of the level where we would like this market to pull back to, and that's the level that we're currently at. So let's allow this market to play itself out. Some of the other trades we were looking at would be the S&P not quite getting the strength coming in fact pulling back off its highs. So maybe those are markets that we sort of relegate to just observation again. However, dollar Swiss, primed market, hopefully we can capitalize on that. But unfortunately, we do need to switch across to the live trade room, guys. So just to draw your attention, do have a look at the details below. Those of you that would like to join us on a regular basis, we have over 76 live trade rooms every month. You're very welcome to join those. We trade the markets during the day for those of you that are interested in intraday trading, but we also trade our capital growth webinar every night, where we look at daily time frames, look to capitalize on big market swings, And if you do read the information below and you are interested in joining us, if you do like our approach, then we're currently offering a 14-day free trial, so you can test and find out exactly what the experience is about for 2 weeks completely free. And then if you like to join us, it's just $9.99 per calendar month to access those webinars. So we hope it's incredible value for those of you that are genuinely interested in learning how to trade. Please do connect with us through our YouTube channel. Give us a thumbs up, or do subscribe to our channel if you possibly can. In addition to that, you can connect with us through Facebook, Instagram, Twitter, and LinkedIn. The details are all there up on screen. So thanks very much for joining us. We do look forward to hopefully you joining us again. We will be live again tomorrow morning through our YouTube channel. So do subscribe and click that bell button. You'll be notified when we do go online. So from everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.